Yeah.
Marvelous.
Hey, look, I got a fun fact for y'all. I ain't never told y'all this. Y'all see that beat? Because I know y'all like that beat, right? That comes with our intro. I created that beat from scratch. I ain't never tell y'all, but I did. I ain't lying. I'm not lying. I created it from scratch. For real, for real. I did that beat. Yeah, our intro, that's all me, boo. That's all me. That's
Well, my
all
daughter was
me.
about to make up a dance to it. She heard it going and she started.
I keep forgetting to tell y'all, but I created that intro late one night. I was in my little prayer room and I created the intro beat. That's all me, boo. That's all me.
Y'all here with your band.
You are a woman of many talents.
Yeah. Thank you. Anyway, hey everybody, welcome to the Homebuyers Clubhouse. My name is Jessie Lynn. I am a triangle realtor with A to Z Realty. Erica, honey, introduce yourself.
Hey, I am Erica Batts with New American Funding. I am your mortgage loan officer.
Samantha.
I'm Samantha Harding and I work with Mortgage Solutions Financial and I'm also a loan officer.
Awesome. Nicole.
I am Nicole Crawford with Cole Williams Realty. I service the the Greensboro Triad area, and I am a realtor.
Yes. Hello, everybody. Welcome to the Homebuyers Clubhouse. Facebook. I think I just have Facebook on here tonight. We don't have YouTube in here tonight because we are doing our night 2 of our seminar and we are doing our FAQ session. So yeah, Samantha, she just went over to her other studio. Now she's back. All right, welcome back, honey. Anyway,
I hear music playing and I'm like, where is this coming from?
Look, y'all. So look, last night we had a few questions that came through. One of the questions is, but first of all, I don't know. Should we go into the questions right now, ladies?
I don't know.
Should we go into the questions, or should we give everybody enough time to come in? Because yeah. Anyway, we could go directly into the questions, but let's talk about this drawing right quick, y'all. We were supposed to have a drawing tonight. The drawing consisted of, for every 50 people that you invite to our group, you can win $100 for every 50 people. For every 50. So if you invite 100, you can get 2 entries into the $100 drawing. Then you can win another $100 if you subscribe to our YouTube channel and you shared it. The next thing was comment done and fill out the Google form. Okay. I've seen some invites come through. I've seen them come through or whatever. But I've seen some... Oh, okay, I turned it off. I've seen some invites come through, but I only had 2 people register on our Google forms, you guys. You don't want to do the hard work and don't register. But look, if you want to win, we're going to give you a little bit more time to get your entries done. I know who invites who. I know when you invited them and how you invited them. But in order to win the $200, you need to fill out the Google form so we can have your contact information. Okay? So go on and fill that out, and we will do the drawing next week, I guess. Friday. We will do the drawing on Friday. We'll give you guys some more time to do that. But you got to do the entry form. All right. So that's number 1. Let me turn off this background music unless you guys are liking it. Audience, do y'all like the background music that we have tonight? Is it making y'all sleepy? Y'all don't like the background music?
No, I was trying to figure out how to get it off my computer. I was like, where is this button? I was like,
let me turn it off. I forgot to turn it off. I was in the studio minding my own business. Anyway, all right. So the background music is off. Thank you, Erica, for letting me know that. Anyway, y'all. So let's go into our questions. So last night, someone had a question about the loan. When we were going through, they wanted to know what percentage for down payment. So our lenders, do y'all want to answer that? And make sure we can discuss the different loan types and all the other fun stuff. Anybody?
Sure.
All right.
So you have different. So depending on the loan type, will depend on the down payment amount. So if you're looking for a government loan type like a USDA or a VA, then it's generally a 0% down payment. So then you only need to bring in your closing costs. If you're looking for an FHA loan, that's 3.5%. And if you're looking for a conventional loan, that's anywhere from 3% to 5% is the expected down payment.
Awesome. Awesome. So, and what did you say about the conventional loan again?
Is anywhere from 3% to 5% as your down
3%.
payment.
Okay, awesome. And some conventional loans that's 100%, right? It depends on what bank or I've
Those are
seen some.
usually specialty products
Okay.
that certain institutions, like certain banks or credit unions, that they offer is a
Okay.
0% down product. So it's not really a conventional loan, but that's just the in-house product for them.
See, this is why you ask a lender, you guys. This is why you ask them. Samantha, do you want to come in? Good.
That is exactly what she said. There is 100% financing, but I believe you would have to have like really, really good credit. It's not something that they just offer everybody. From
Say
my
that
experience.
again.
I said typically you would want to have really good credit because it's not something they offer you if you have lower scores for the most part. That's not
For the 100%.
Mm-hmm.
Yeah, I think with the credit union it's around like 640. That's what I got when I went through them. It was around 640.
Mm-hmm.
But
So
that's
generally,
an ARMS product too, isn't it?
Huh?
It's also a adjustable rate mortgage, typically.
No, they actually offer they do fixed rates, now as well.
so they do fixed. So when most people say the credit union for this area, they're talking about a state employees credit union product. Their 100% financing is a adjustable rate mortgage. They do now offer a 30-year fixed, but that is you have to put at least 10% down in order to get the 30-year fixed product.
Boom. That's why you asked for Linda.
Thank you, Erica. Because I was like, wait, but there's some caveats. I just wanted people to know now.
Right.
There you go.
And there are
This
other
is how
credit
we
unions
do it.
that offer different specialty products. So there are other credit unions that do offer particular specialty products, but most of the time those are going to be adjustable rate mortgages with the 100% financing.
Awesome, awesome. So Nicole, last night we were talking about like some of the things that came with the offer. You were talking about the refrigerator and all this other stuff that comes with the offer. You were kind of mentioning that. And could you tell them, like, could you elaborate on that a little bit better? Like you were talking about some of the things that don't come with it. You know, some people want to get the furniture in this house. Could you explain to them why you said that they can't get the furniture on their loan if they're getting a loan?
Well, typically anything that is what we consider personal property, which is your movable items that are not affixed to the house. That's the person's furniture. Their refrigerator is a personal item. Anything outside of that, we tend to do outside of the contract, because if they're put in at the contract, they're put in at zero cost. Most people are not selling you their furniture at zero cost. So that what we can't add it into the value of the house. So we have to do a bill of sales for the furniture. So we can't put the refrigerator in there. That's a common thing that a lot of people ask for in the purchase of their home. But like I said, it is at zero cost.
Exactly. So lenders, have you guys ran into any issues with that? Or do you guys just check that off the top? You're like, look, you can't have this couch or this car in on this offer on this contract. Have y'all ran into any issues like that?
I have. So I don't know if
Yeah.
Samantha, have you run into any?
You already know my clients be having other issues, and that's not at the top.
Okay.
That's not at the top. So
Well, I did have a client who, when they went into this particular house, they wanted like the pool table that was in the house. They wanted the living room set, those type things, and it did have to be negotiated outside of the actual contract.
Definitely, definitely. And a lot of the times you're a real estate agent. We kind of know because we've ran into these issues a few times. You know, you may have a newer agent that may not know this, but a lot of times we kind of know not to send that in with that pool table on there. We already know it's gonna be some issues.
Right.
So yeah. So the next thing is so this came through today. Can you get a mortgage after filing bankruptcy?
yes.
Yes.
Okay, can y'all elaborate, please?
I'll let Samantha take this one, but yes, you can.
Come on, Alex.
Why you always, every time I be like excited about it, and I be like, oh darn, I just
Hold on. What's that girl on CNN the lady on CNN that blinks?
I
Oh,
have no idea.
is it like that? I don't watch CNN. I don't watch TV, so I don't know what happens on TV.
Oh, she. All right. Can y'all elaborate, please, on the bankruptcy? Thank you.
Miss Lauren, I wrote some notes down about bankruptcy yesterday, but yes, you can do out of bankruptcy. I think it's chapter 13. Is it? You can file it 1 year later. I think for some of them. I think I can't think of them right this moment.
So I can tell you that it depends on the products that you're looking at. Each product has different guidelines as far as bankruptcy. So you have your chapter 13, chapter 7 for each of them. If you're looking for FHA, chapter 7 guidelines are 2 years from when you file bankruptcy. Chapter 13 for FHA is 1 year since you have actually filed. You do have to get permission from bankruptcy court if you're still in bankruptcy, all of those things. So it is possible. And again, different products have different guidelines.
There we have it. There we have
They're
it.
saying bankruptcy is not always bad, everyone. If you haven't paid your bills in like 10 years, you might want to consider bankruptcy because it's bringing you down.
Exactly. And last night we didn't elaborate because, we had, the previous night we had the lenders talk. So could you let the people in the audience know the minimum credit score to purchase a home?
There isn't a minimum credit score per se. I hope that Erica looking at me like, okay, there isn't a
I'm letting her take this.
You can buy a home with no credit score, which is not necessarily a minimum. Wait, what just happened?
Mm-hmm.
Y'all do a spotlight or something?
This is what we do in our seminar. Keep going, ma'am.
Oh, okay. So you can have no credit score and purchase a home as long as you have alternative credit. Hopefully I'm saying that correctly. And you can also buy a home with a 500 credit score. And for us, VA does not have a minimum credit score. So if you have a 480 and you paid your bills in the last 24 months, there's a possibility you can get a home through VA. And for FHA, for us and most people, is 500 as a minimum credit score. But that does require 10% down.
All right. You said 10%. Erica, you want to come in? You got anything else?
Well, what I will say is remember that different lenders have different criterias as far as the amount that they lend on. So just like for me, mine is also 500 is the lowest. But typically you're looking for a 580 middle credit score, and that's a middle FICO score. And you're looking for a 620 on a conventional basis for your loans. But talk to your loan officer, whoever you're using, have a conversation. Even if you're not sure where you are, so you can see what their guidelines are and how it applies to you.
Awesome. So this kind of goes right now. This is the biggest question that we get a lot. Is now a good time to buy your home?
Absolutely.
It's always a great time to buy a home if you're in need of a house. If you're in need of a place to stay, whether it's a personal property or an investment property, it's always a great time to buy.
All right. And why is it a good time to buy a home right now? Because we have the interest rates going up. Why is it a good time to buy?
Because the longer you wait, the more it costs you, or the less house you can afford in most cases. So if your money stays the same, most people get a raise once a year. But your raise does not keep up with the changes. So just like I have somebody that I quoted, I started working with them last July. They've been looking for a house, but they are looking for a particular kind of house. So it is taking them a while. So they had started out with a 3% interest rate when we first started this process. Now they're looking at a 5% interest rate. And that's because it has taken them a while to be able to find a property. And of course, that now costs them more. So you're looking at an extra $150 a month that they're paying just because of the time that it's taking them to find a property.
Awesome. So I have another question. So I have a buyer who would like to purchase a home. They are a first-time home buyer. They just starting a new job. We kind of already know the answer to this. They haven't started a job yet, so right now they don't have any income. So we already know who we're gonna have to wait till we get some income coming in or whatever, because they're going to school. But they want a house with the wow factor. What would you guys tell the first time home buyers that have lower income that wants the wow factor? What kind of recommendations would you give someone that wants the wow factor and they're first time home buyer with lower income?
Who
I'm
are
gonna let
they?
Nicole answer that one.
So for me, my recommendation always to my clients is that first house might not be your dream home. Um, if you're set on buying something that has that wow factor, you're probably going to have to look outside of the area that's most popular. For our area, Greensboro is not somewhere you're going to come into with low income and get that house that looks like it's HGTV ready. If you want that, maybe going on the outskirts of the city or into those cities that are a little bit less popular might be an option. Or find that house that you can make have the wow factor. That's going to be the biggest thing. I think a lot of people overlook that house that you go in. It doesn't look as appealing at first when you walk in, but it has the space that you need. And it's probably priced $20,000 lower. Why not take that one, take the next couple of years and make it your own? You're building your equity in your home.
Yes.
And so when you're ready to resell it, now you're on the top of it. And now you have a house that you're selling with the HGTV factor, and you're going to get more money out of it.
Yes, yes, yes. That's good advice. And that's one of the biggest things. Like, you can make it your own, get your fix upper. If you can't afford it, fix it up and make it your own and give it that wow factor or whatever. Fix it up. You can do it or whatever. Or just start where you can start. Get your first home or
That's it.
whatever and rent it out if you have to. Get that townhouse, get that condo. Be a landlord later on in the future, 2 years from now, whenever you get that promotion on that job, or you start whatever you want to start, do it 2 years from now. You can stay there. You're renting anyway. You're paying your landlord. So yeah, be the landlord. Think of it as an investment property, if
And
that
that's what I
makes
was
sense.
going to say, because I think sometimes people get so caught up on it. Because if you boil it down, even the HGTV factor is not for you personally a lot, is but what can I show off to the world? So
Mhm.
bring that in and just think about what can I do for myself if I buy something on the lower end, make it my own, make it great. And now I have more equity to buy the big house that I want in a couple of years, because you'll be able to sell this house or keep it
Yes.
and you have more money. So then you get the, if you're really big for flaunting, you get to flaunt a little harder because now you have the money to actually afford what you want, and you can afford the car in the driveway too.
Amen. Amen.
And I would
Amen.
say, sometimes you have to look at alternatives. So look at getting maybe a duplex. So that way you can claim the rent from the other side as well, when you are qualifying for a home, or, a multifamily, those kind of things. Or even, you know, just when you're buying, buy for the stability of the payment, not necessarily the dream house. Because,
Yeah.
when I looked at where, for me personally, when I looked at where I started, I think my apartment was like $550 a month. Well, now that apartment is $13.95 a month. But then when I look at the amount of money that I saved by just buying a house, so my house payment has gone up a total of maybe $150 in 20 years.
Mm-hmm.
Whereas that apartment rent, oh, that went up a whole lot.
Mm-hmm.
Listen, after 5 years, you right now, your rent may be lower than a mortgage, but in about 3 to 5 years, that mortgage is going to be high. I mean, that rent is going to be higher than your mortgage, and your mortgage is still at the same rate. So y'all have
Right.
to think about it like that, long term, not short term.
Yeah, the industry isn't recouping a lot of money that they lost. So a lot of landlords for many years could not charge full rent on their houses. So now is the time, and they are seizing every bit of it. I'm seeing even with my daughter's rent, we were paying $12.47 in Raleigh, and when we got the renewal, they wanted $13.47. If I do
Mhm.
anything less than 5 months, they want anywhere from $1,500 to $1,800 a month. That's two houses somewhere for somebody We refuse
Right.
to do that. So we have to be smart with our money, even when circumstances mean that, hey, we do have to rent for the short term or right now. Be smart. Do we have to have the apartment with the pool and the movie theater and at the clubhouse and the things that we're not going to use? Why not take something a little bit cheaper where you can save your money? It's always about making wise decisions, and let's do the payment instead of the flashing for the big house.
Right. Work smarter, not harder.
You got it. You got it.
Indeed. All right. So I have a question. It says, "What should I do if my income is too low? I have a 700 credit score. What should I do?" And we kind of just answered that question, right?
Well, it's still too low for what though?
That's it.
So you have a job, you have we can still calculate what a payment will be, and then hopefully we can find you something within that payment. But it's different if you have a job where you're making a low amount, but you also have an $800 car payment or a $500 car payment, things like that. So you have to see what is going to work for you in your budget. So I can say, because for some people, making $40,000 is a low income because all their friends make $100,000. Or, and then for some people, $40,000 is, oh my God, I can't believe I'm making $40,000. I am rich now. So it depends on what your viewpoint is. And you have to remember that that's one of the basic things is you have to have a place to live. So is it going to be a place that you pay for your own future, or is this going to be a place that you're okay with in order because you can't find the perfect house that you want, but you're living in a 2-bedroom apartment? Then why can you not still live in a 2-bedroom house? So I think a lot of people feel like, oh, this house that I buy has to be absolutely perfect. And it's not that way. Everybody has, I've always heard the moment that you get your house perfect, it's time to move. Because every time there's always something about a house that you don't like, whether it's the flooring, the countertop, whatever it is. And those are always things that you can make a change to.
Absolutely.
Definitely, definitely. Yeah, ladies, y'all have anything y'all want to add?
The only thing I have to add is that, like you said, if you make $40,000 and you don't have a high car payment, then your $40,000 go further than someone who makes $60,000 with a $900 car payment. So, although you think the money is the issue, the money may not even be the issue of how much you make, because your money may go further based on your personal circumstances.
There are people out here making $100,000, but but by the time you look at their expenses, they may not be able to afford the $3,000-$4,000 house.
You got it.
Correct.
Yeah, I've gotten those calls. We make good money, but we couldn't be approved because of such. Yeah, unfortunately, I see that a lot. I know people make $300,000 a year, but it's almost like the higher the income, the more debt you have.
The more
It's
things up.
hard to pull back. So unfortunately, a lot of us make those mistakes or whatever, but it happens. So, like you said, some people making 40,000, they rich. They good, but
Exactly.
so yeah. All right. So one last question. We have 25 minutes. So one last question. I guess the rent to own program. Takia's not here tonight. Somebody was asking if they do that in Maryland. Didn't she say when I shared that with y'all that they were doing that up that way? Do y'all remember?
I don't remember.
Don't remember.
I don't remember, but I do know the companies that you were talking about. I do believe they're across the country. So there's usually a reputable company that does the rent to own program in most of our major states.
Yeah. Okay.
I think wasn't Jay-Z coming out with a rent to own company?
That's the company. I think that's Will Smith, Jay-Z. They were they invested in that company. So that's what I've been promoting on my page. And that was one of the questions last night when we were doing our live. It was the same girl that was in there. And she wanted to know about the rent to own program. So it's lease with the option to purchase. And since we're talking
Right.
about it,
Exactly.
it's
So
$0
basically,
application fee. It's a soft credit pool. $30,000 in income a year, compared to the other program that I've worked with is like 50,000, and they have to pull your credit. I did say $0 application fee, right? The other program is like
$0.
$75 per family. So this program is more targeted for the lower income. You can get a house anywhere between $110,000 up to 400,000 or 500. I think it's $500,000. You need to have at least $3,000 in savings, and they're saying that because whenever you rent a house anyway, you're gonna have to pay your security deposits and all of that, and they want to verify that you have that. But the difference between this program and the other program that I work with, that $3,000 that you have in your savings account, it goes towards your deposit, your security deposit, but you can take that money and put it towards your closing costs and your down payment whenever you get ready to close on that property. They consider bankruptcy as well. They pretty much they don't want to be your landlord, so they give you about 2 years, and they offer free credit counseling, and they also they're going to prepare you for a mortgage. So that's why they consider bankruptcies and your own time payment history and all of that. They just want to make sure you're ready to buy your house within 2 years. I've had quite a few people sign up for it over the weekend, so we're just kind of waiting. We had some that was added to the wait list, but we have some right now. They were pre-qualified, and we're waiting on them to send in their supporting documentation. So it just depends on. It's just like a mortgage. They're only going to approve you based off of your income. They don't want to put you in a $500,000 house and you can't afford to get a mortgage further down the road.
Right.
So it seems like I like the program. Like I said, because if I couldn't compare the other home partners and landed side by side, I can see why this company is actually there to help people with lower income, because that's what they're really doing. They're trying to help you, and they're trying to get you in the house. So yeah, y'all got anything else y'all want to add to the audience before we leave? Nothing?
I was
We got
gonna
2 more
say,
minutes, so we can just sit here and talk if y'all want to, because we're gonna sit here about 2 more minutes.
oh, so
So
you gonna make us sit.
say what?
I said you gonna make us sit.
Yeah, we got 2 more minutes. Audience, y'all have any questions out there? Okay, but yeah,
I have a question for everybody. So, what advice would you give to a first-time home buyer?
do it. Just do it. A lot of people, I think, a lot of times people overthink buying their first home. They overthink it. Just do it. Talk to your lender. Talk to a realtor. Don't go out and try to figure it out yourself. A lot of people feel like that the lenders and the realtors, they are out to get them. At the end of the day, we are on your side. We are on a team. We are here to help you. We're not out to get you. And you don't pay the realtor up front. They think that they have to pay the realtor up front or pay the lenders up. You don't pay us unless you decide that you want to go get a house after you sign a contract with us. But you don't pay us. The seller normally pays us. But we are here to be your support system. We are here to guide you, and we are here to help you. Just do it. All right, Erica, what would you tell them?
I would say separate your needs from your wants.
I like that. Samantha?
I would say, like you said, just do it. I have a client. I have 2 clients, a brother and sister, you guys, buying their first home this month. And they went over the weekend and was just like, they found a house within 1 day. And I was like, my goodness. But they were in a situation where they needed to move. And I was like, I've went to visit lots of houses in my day. And I was like, I never thought I'm just gonna go out one day. And they was like, you know what? We're satisfied with it. And they put an offer in. It was accepted. And they went under contract, and they're moving in in the next 2 weeks. And it was just
That's
so
awesome.
simple. And I was like, man, if it was only that simple for me.
Yeah,
So I
that's
guess
awesome right there.
separate the needs from the wants.
That's awesome. I like that.
Yes.
Nicole?
If I had I think because of a lot of what I'm getting from people right now is I would say really sit down and take a real good internal look and really decide whether or not that's what you want to do. I think a lot of us are doing a lot of talking about what's going on in the market, what it means, and a lot of people don't understand that until you get in it. But I think the problem that a lot of people are having is they don't really we'll get in it. Somebody will pull our credit and they'll say, okay, this is the plan, but they don't want to take the next step. There's not so much pushing we can do to help. We can call you back, we can follow up, but until you know for sure that you know that this is something that you want to do and you decided for yourself that you're going to go ahead and do it, there's nothing we can do to help you. But know for sure that that's what you want to do, because the rest of it will start falling in line. Even when you have bad credit and you're working on it, once you decide that that's what you want to do and you start working on fixing it, it tends to start, it's a domino effect. It just starts to work out for you. You really get that motivation to pay that credit card down. You really get that motivation to be motivated, not to spend all that extra money at Starbucks and the other things we're doing. So I would say just really take that moment to really think, is this something that I really want, and am I going to work to get it?
Yeah,
that part. Work to get it.
I love to see the buyers that reach out to me 6 months, a year later, after they've reached out to me and they say, I'm ready, Jesse. I'm ready. I've been pre-approved. I love that, because that shows you've been doing the work. But you're right. You have some. I've seen some that's pre-approved. And it's been 2 years and they still ain't found a house. So, with 0 offers.
There's a lot of pressure out there right now, looking for houses, and for some people are not in a mental space to be able to handle that. And if that's if you know that's where you are, then that's okay. But but you have to do the work to try to figure that out.
But those them, I'm not even talking about the ones that's in the middle space, because the ones I have seen that has recognized it right away, they just like, I can't do it. I'm not just the multiple offers and I'm just not prepared for it. I overthink, you, like Nicole said, you try to talk them, you try to calm them down, and they know that they're not there. So those that they're not even like in that category. It's just the ones that looking at house after 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 house, and they're gonna find something wrong with each house. Has everything. What'd you say, Nicole?
Every last house. And then after I didn't show you 15, you say, you know what? I think I'm gonna wait.
And then 6 months later, house after house after house, I'm ready now. And then it's like they always talk themselves out of it. And that's that just do it thing. Like, just do it. Like, what is it? Because a lot of people don't understand like what we do. Some people think that we're just sending houses or whatever. And sometimes we look up, but sometimes like, we are on our phones just like y'all, like looking. We get that notification in the MLS, like, especially if we know you're actively looking. If you're not actively looking and you've been pre-approved, that's a different story. But I know you're actively looking. I am looking for this house for you. I'm checking, and we're doing the work, but you're still overthinking it. And I understand, because I'm like that with investing. So I understand. It's a lot, and they're listening to everyone else. Stop listening to your cousins. Stop listening to your uncles. Stop letting everybody psych you out, and let us guide you. Let us hold your hand. That's why we're there. So.
And I think a lot of people who say, oh, well, I can't find anything in my price point, so I'm going to wait. Well, understand, I want people to understand what waiting means. Right now, what that means is, I understand you can't find anything in your price range right now, but understand that in 6 months, you're not going to be able to afford as much house. So now you're looking at, so if your budget is $350 and in 6 months from now, your budget is $325, why not start looking at 325 houses now? Don't spend to the top of your budget, so that you can adequately find something. And as I said, when you separate your needs from your wants, you are looking like, okay, I need to have 3 bedrooms. I want to have granite countertops. I can always add a granite countertop. I can always add a flooring or paint or, all of those things. Or if I want a feature wall, which is a popular thing now, there's people all over TikTok, YouTube, all of those places that will show you how to do a feature wall.
Indeed.
And that's why I say it, have that internal, because a lot of how many times, Jess, have we tapped out somebody that says, I have to have this, and this. And then the house they go under contract does not have that, nor that, or that.
It's
But
not that house. And no matter how much you tell them in the beginning, like, hold on, because that's how, you should, no, this, I gotta have it. Okay. And
Listen,
I'll just send it. Here you go.
people be dating the wrong people for 30 years. So I mean, hey, it's just, I'm just saying, like, they know it's wrong, but they be like, he does wrong, but you be like, well, you sure about that? So same way with the house or anything big, they be like, you like, I want this, but this is a mountain house. You said you want to live by the beach. Why are you?
But that's what we deal with on a daily basis.
All the time.
Sometimes we do need a little guidance to figure out what exactly we do need or we do want. I say want, but I think a lot of times we're so caught up in what I want instead of what I really truly need. And if we can get past that and just stick with the needs, you'd be amazed at what houses will open up. Because a lot of times I find that, my client will only qualify for 250. And I keep telling them, the longer you wait, I have people that have been looking for almost a year now. So when we go back and we start requalifying again, you can't afford what you were looking at the first time that you couldn't find that house in. So why not, like Erica said, why not start looking a little bit lower or look at your list again and say, you know what, I really don't need that. I really don't need that because those are things I can do. If I buy the house and it has the extra land, I can build that little shed I wanted in the back, or I can do the little extra things that I wanted. Sometimes we just have to think a little bit outside our own box.
Well, sometimes this may not even be improving the house to what you want. Sometimes it's okay. Well, if I can stay in an apartment for an extra 2 years while I wait to get this house, I can stay in this house over here for this 2 years and build equity. And then when I sell that house, I now have $50,000, which I know I could not have saved $50,000 in 2 years.
Absolutely.
Now I can walk away with $50,000 in my hand. So sometimes it's okay, let me just do what I can for right now. Let me get the house that I want, the ugly house, blah, 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 all of that, because I know that it's going to have some equity in 2 years.
Absolutely. And somebody will rent your little ugly house that you bought and that you didn't like and think it was a palace.
Exactly.
They do.
Y'all have me on a spiritual note. I felt like that space, you had to move yourself into a new space to get what you want. You can't be in the same space thinking I'm going to get what I want. Sometimes it's a blessing over there. If you move from over here, over there may be some better stuff in the store. The land may be better. There's maybe fruit over there. So I don't know, for some reason that felt for my spirit like it may be best to go over there. It may be scary, but over there, maybe where you can find fruit or harvest or whatever you might find over there. Stop staying where you're at, looking for blessings.
Yeah.
So that was a good question, y'all. It took us 10 minutes for that one question.
I just think a lot of people scared to jump out there.
They are, and I understand. I really do. But we really got to stop listening to our cousins and our uncles and what somebody said.
And telling you what happened when they bought a house 5 years ago, 10 years ago. This is not that market. And, I had somebody say, well, I want to buy a house, but I think I'm going to offer, $20,000 less because it need a paint job and, like, oh, okay. Like, no.
You think that's already priced according to that? Let's pull these comps and find out.
Right.
That's what I pull out. Yeah.
Yeah, this market ain't the market that your sister bought 5 years ago when, you could have them pay closing costs and you could go into this transaction with absolutely no money. Now you're going to need some earnest money, some due diligence, you got to have something.
Wait a second. I had two clients now that went in with nothing, y'all. It was a miracle, but it worked out. But there was one small miracle. You may not get that miracle. Prepare for not getting the miracle, y'all.
Right.
It is on the market.
And I'm not going to say it can't be done, but typically it's not the houses. The problem is we want to try to do that on the HGTV house.
Yeah.
That's not where it's happening. Because on the HGTV house, you got 50 offers.
Definitely.
The house down the street that the people didn't clean up quite so well. And when they walked in, it kind of smelled like somebody just finished cooking dinner. and their clothes was all over the place and the kitchen sink was piled with dishes and they hadn't done really any repairs in the house. Now you might be able to work that one out on the
Yeah.
low. But you
Mhm.
ain't, yeah, the one that's pretty and it's smelling good and everybody throwing in offers left and right, they're
It
offering
ain't
their
happening.
born children for that house.
And that's what I tell a lot of people. It depends on the market and the house.
Absolutely.
But it
Right.
Absolutely.
depends because you can go to some of these lower markets also, but still, if it's a good house in some of these lower markets, you're not the only one that want that house. But if
Absolutely.
that house been on the market for a while and it's in one of those, yeah, yeah, $500 due diligence, you good, girl. That's all you got. This is the house. But yeah, you want to go in there asking? This might be the house, but don't do that. Just hit the market in a good market. It ain't happening.
Well, listen to
It's
your
not.
realtor. That's when you gotta think. You have to listen to your realtor. These are you guys are the professionals in this space, and this is what you do every day. This is not your mama's cousin's nephew and all of those kind of things. Listen to the people that do this.
Thank you. We appreciate that.
Listen,
Yeah,
We
I
spend
hear it from the
hours.
other side, so I can absolutely understand.
Yes.
it's tough. It's tough out here, y'all. But we always say, contact your lender. Contact your lender. How much money? Contact your lender. Contact your lender. And sometimes you do get that they don't contact that lender. But contact your lender.
Well, and then a lot of people look at when they're looking at houses on Zillow or whatever, they're looking at, oh, it said that the payment is going to be $1,500. Yeah, but what you didn't factor in is that's with a 20% down payment. That's for somebody with a 740 credit score. That's for
Hmm.
you don't have those things, and then because you're paying it in rent, you feel like, oh, okay, well that's what I can afford in a house. That is not always the case because the criteria is different buying a house versus paying rent. So we need to have a conversation to figure out how much you can actually afford.
And
Not to mention your
a lot of people don't get that part, that what you pay in rent may not be able what you can afford in your mortgage payment. Because I'm gonna tell you the first clue. When you don't pay your rent, they're gonna put you out in 30 days. Okay?
Hmm.
Mhm. Before
Within
30 days.
Yeah, the court paper's going to be filed in 2 weeks, and you will be out by the next month. With your house, the bank does not want it back, so they're going to make sure that you can afford it. So even because when you go to apply at the apartment complex, they're not calculating your $900 Audi payment because they can
That
care
part.
less as long as you're making that rent payment on time. But the bank does because they're not in the business of collecting houses.
Right. And
Indeed.
so most rental properties you have to make 3 or 4 times the rent.
Mhm.
So they don't say, okay, you have to have bills that are XYZ amount. They just want you to make three
That's
or
it.
four times the rent. That's all they care about.
But
Show
the
me proof.
situation changes too. Like when you got into your apartment 2 years ago, you didn't have that Maserati. You didn't have like you your situation changed since when you were when you got in your apartment. So what you was doing then is not what you're doing now. Let's focus on right now. What is your current life? Not who could have been what and where it was. Your current life. Let's focus on current, not used to be. Like we can't do that.
And yeah, I want y'all to understand that we ain't judging you.
Oh,
We don't think
absolutely.
we up here. We don't think we've been there. We've all been
Mhm.
there. We've
Yes,
all
we
been
have.
there. You know how mama is. Mama tough on you because mama has been there. We've been there. We've seen our buyers there. So we are here to help you. We ain't judging you. We giving you this mama attitude right now because we've
Mhm.
been there.
Amen, amen, and amen.
And amen.
Amen.
Amen. Jesus Lord. Yeah. We didn't even. That's a different day. Y'all just watch some old videos. Y'all see all my debt I had last year.
Well, even
It
when we're
won't
talking
pretty.
about people who may have made mistakes along the way, those are all situations that we've had. We've had the person who went out and bought furniture the day before they were supposed to close.
Mm-hmm.
And notice I see it's supposed to.
Scheduled.
Exactly.
Schedule.
Scheduled.
So, and,
No.
and I think what all of us want is we just want you to be able to get into a house.
And
So
be
we all
considered
working towards that
happy.
goal.
Absolutely.
Content
Definitely.
with your house. I can't say happy. You may not be happy with your house all the time, but at least be content with it.
Definitely. Definitely. But some people are okay. I mean, you're okay with renting, that's fine. They want something nice, and what they can get nice right now is their rental. Just know your mortgage may not increase, but that rent will.
Amen.
And
And
you
when
can
Right.
have
that's
your
Yeah.
same nice house if you take the same amount of time and fix it up and turn it into your own personalized house with what you can afford right now, whenever you get that raise in a few years. So, yeah,
yeah,
like I said, it's all you. We ain't here to judge you.
at
Anyway,
all. We not judging. If you like them kids bouncing off the ceiling and you can hear it downstairs, we not judging you.
we ain't. We
I
ain't.
hear my
Because I
neighbors
know
like
when I lived in an apartment, I know my neighbors couldn't stand me because I was above them, and I had a daughter that wanted to stomp, wanted to jump, wanted to hide, wanted to fall out. She did not care. I'm like, girl, stop jumping, stop yelling, stop screaming. Yeah, I know I was that neighbor
Well, and then when you
above
get
you.
the person that's above you that weighs all of 95 pounds, but sound like they weigh 350.
That's us. I walk hard. You hear me coming.
At 3 o'clock in the morning, doggone
Exactly.
I'm yelling through the house.
it.
So I was that neighbor. But if you're okay with it, cool.
We love
Yeah,
it.
we ain't judging you. That's
I
all
live
I'm
an apartment life, you guys, but I'm a newly, I have a new line of business, so I'm kind of stuck, but I'm not gonna be stuck forever.
But
Right.
that's what I did. When I got my real estate license, before I got my real estate license, I was $1,400 a month. When I got my real estate license, I went right on into an apartment based on my income, $700 a month. That's what I'm saying. I've been there. I've been there. But I gave myself a year to get up out that apartment until I bought my house. That's what I did. Save money,
Absolutely.
fix my credit, did what I needed to do. So yeah, we ain't judging you, honey. We ain't
I'm
judging you.
not judging you at all because I think it's about more about sometimes we all have to take a step back.
Mm-hmm.
It's whether or not you stay there,
Yep.
Well, sometimes
especially if you're
it's
not,
making
you
a
don't want
plan.
to. Mhm. Say
We're
that
Yep.
not
again.
judging. We're giving a nudge. We nudging you a little bit, like, "Hey, neighbor." You know how they be like, "Tap your neighbor" at church. Tap your neighbor. Hey, neighbor. We just
And
want you to know, neighbor, we love you.
exactly. And I was having this conversation with my sister today. I about to say my son. Is when we grew up, the way we grew up, it was like, and unfortunately, people still have this mindset today. But I can say I hear people talk today, and our mindset is shifting. It's a little bit better than what it was. But at one point, and unfortunately, we still have some people who get they they don't want their food stamps to get turned off, so they feel like they can't make more money. They don't want to lose their Section 8 because they don't want to make more money. And again, I'm not judging you, but like you said, you're there temporarily or whatever, but that is not there for you to be there forever. So, yeah, because you got to think about it. I've seen people. I've been in property management. I've seen people pass away in these apartments. Then they lose their subsidized housing. Then that family don't have nowhere to stay at the end of their lease. Like you got to think about long term, and this is how we started this thing tonight. Think long term. Think about your family whenever you leave this earth. What are you leaving for your children? If anything happened to me today, what are you leaving for your children? Your family set up. We talking about this later on this month, y'all. We talking about life insurance. We talking about all this stuff in here. The Home Buyers Clubhouse is not just about home ownership. It's about mindset. It's about your life insurance. It's about your family. It's about leaving a legacy. It's about generational wealth. It's about generational health. It's about all of that. But we gotta start here because unfortunately, in our neighborhoods, we have that mindset. We don't want to grow and we don't want to expand because we don't know no better. Our mama done it. Our daddy done it. Well, not our daddy. Our mama done it. Our cousin done it. Our daddy done it. Our family done it. The person before that done it. So we doing it.
One thing I would like people to think about is, okay, even if you're thinking, well, I don't want a house because I don't want, blah blah blah. I don't want the responsibility. I don't want that. For most of us, we didn't grow into, like some other cultures. They grew into something where their parents had a house and they could start them out with, okay, well, when my daddy passed away, he left me a house, or blah blah blah, all of that. And that's not where we came from. That's not where most of us came from. So we are behind a little bit. But just think about if, when you got ready to leave college or whatever, your parents could have gifted you a house, or you already had a place to live. How different would your life be if you were in a paid for house, or if you were in a house that's, I'm paying $300 a month, but I own this house, but I have, $300,000 worth of equity in this house. That's
Or your siblings.
Well, right. And that's money that will allow you to start a business. That's money that will allow you to pay for your child's education, and they can walk away with no student loan debt. We already know how crippling student loan debt is these days. But it just, property, when you own property, it gives you options.
Definitely. And see, for me, I didn't have no idea about student loan debt until I had my own child, because I didn't go to college. Well, I didn't go to college because I didn't want to pay the debt. And unfortunately, we have people that, so yeah, we, that's a different story. I'm telling you, I've had these conversations today as we speak. Go on, y'all. Go on. Sorry. Somebody's about to say something in the bottom. I think it was Samantha.
Oh, I wasn't. Listen, I thought about that. Even though, like, Nicole's daughter, like, when my sister was she's 5 years younger than me, and she went to college, I was like, man, I should have just bought the apartment she lived in, because she paid someone else's rent for 4 years. And I didn't even want to live in that town, but I was like, man, had I just bought that, I would have sold it when, she left, and she could have paid a little $400 to me. Her and little 5 people in there, and, I could have made a little bit of coins, and she would have went to school debt free at that point, because she only had to pay for housing, and then I would have had some equity and been able to move forward. But I didn't even think of it at the time, and then I'm like, man, I could have done that, and I could have saved money. So even if it's not just you, like Erica might have a little sister, she said, okay, you going off to college, I'll buy a little house in Winston-Salem or wherever it is that they want to live, and that could be your house, even though you don't want to be a renter or a buyer or a landlord. It's something to help your family, not just you.
I actually had a client who did that, and that's what they did, was they bought a condo when their child went off to college. The child got roommates. That's how the child got like their spending money, because even once the rent was paid, well, now that provided them spending money for the entire time they were in college, and then that even allowed them to start paying down on their student loan debt early. So at the end of it, then they sold the house. They took the additional money, that the equity that had been gained, paid it down on the student loan. So now the child has graduated college with no student loan debt. They had money the entire time they were in school. It was a win-win situation.
That's what I told my son to do. It was like a house over here, 2-bedroom, $130,000 house. Get you a roommate. Get you get you a roommate. Stack. Make that money. Pay for, So yeah.
What do they say? That's the difference between playing chess and playing checkers.
Yep. Indeed. Be an investor. Be a landlord. Do whatever. Anyway, look at y'all. We spent our entire hour here. We weren't even supposed to. Anyway, y'all got anything else?
No, I'm pretty excited in general, you guys. Like, my clients who went and bought the house in a day, I'm pretty happy for them, y'all. Like, they don't have to worry about where they're going to live. Their rent was going up. All kinds of stuff was happening. And they made a decision. Like, we're going to go through. They sent papers on time and everything. And this made my day, y'all. Like, y'all don't understand. And everybody comes like that. Like, well, y'all understand. Y'all have one day was like, this is it. Like, what?
It's a good feeling. And this is why, we do it. And this is why we stress ourselves out. But like you say, when you have the clients that actually do what they're supposed to do, they do their due diligence, it makes things easier. But like I said, either way, it's rewarding both ways. But you got to want it just as much as we do. We want you to win, but you got to want it. You do. You got to turn your stuff in. Got to turn it in. You want the house, you got to turn it in.
When you got to chase people to turn their paperwork in and, respond to you and all of those things.
Yeah.
That's not a good thing.
It's not.
You got to want it. So anyway. All right, y'all. That's the end of night 2 seminar. If I could reach my thing, I would. There you go. Can y'all hear anything? No? Nothing? Okay.
No.
Anyway, that's the end of night 2 seminar, you guys. Thank you guys for tuning in. For those of you guys who don't know me, my name is Jessie Lynn. I am a triangle realtor with A to Z Realty. Erica.
I am Erica Vatz. I'm a mortgage loan officer with New American Funding.
Samantha.
I'm Samantha Harding, a loan officer with Mortgage Solutions.
And Nicole.
And I am a realtor. I'm Nicole Crawford, a realtor out of Greensboro. I'm with Keller Williams Realty.
You guys, you can find us in the clubhouse in our private group. That's where all the good stuff is. Or you can find our private group on our Facebook page if you want. But make sure you join our private group. Also, you can find us on YouTube, the Home Buyers Clubhouse, YouTube, Home Buyers Clubhouse, Facebook. Both pages. Home Buyers Clubhouse, Facebook, the Home Buyers Clubhouse on YouTube. You guys, y'all have an awesome day. We'll talk to you guys later. Oh, wait. Find us at www.thehomebuyersclubhouse.com. Look, we don't do this at nighttime. It's past my bedtime. www.thehomebuyersclubhouse.com. We'll see you guys tomorrow. Y'all have a good day. Bye.
Bye.